Sharif, thank you for being with us.
No problem.
You have a tremendous experience in partnerships, and before that you used to work in B2B sales,
Yeah.
and then commercial partnerships, and now affiliate partnership as well.
Yeah.
How do you understand partnership? How do you define it?
So for me, the overall view of partnerships is essentially anything where a customer base is going to get a better experience or a better service, and ultimately two or more companies are going to benefit from using each other's services or each other's facilities or products or whatever it may be. So, to look at it more intrinsically, sort of, for me, strategic partnerships are one area, and that's very much where, to put it into a simple context, two companies are going to benefit from using each other, and that may be, put it into a fintech perspective, someone like us, a lender, partnering with a digital bank, where
Right.
the digital bank is going to be able to offer their customers a new service that's going to help them with customer retention, and the customers are going to enjoy it. And at the same time, we're building our own customer base by, again, acquiring essentially users from their own customer base. So both partners are benefiting, and also the customers are getting a better service overall.
Right.
If you look then, the other side of things would be, for example, affiliate partnerships,
Right.
and that's much more, it's less a strategic partnership, because it's actually generally where one partner is essentially a customer acquirer, and we're just taking that customer flow from them.
Right.
So, for example, a financial comparison site or an aggregator,
Right.
that their sole purpose is for people to go to them, find the right financial solution for them, and us to be on that panel of solutions. If we're the right sort of lender for that person's needs, we'll then have that customer, they'll come through to us and we'll serve that customer. So at the same time, it is both businesses are benefiting, but it's much less, they're not trying to build up customer retention or use us as a tool to give a better customer experience.
Right.
It's much more their sole purpose is to find a solution and then just pass the customer on.
Right. From what I understand, partnership isn't finished on a stage when you sign an agreement or you integrate products.
Yeah.
Engagement is a really big, important part.
Absolutely.
And maybe something else. How do you engage partners?
So a very big part of partnerships is the relationship.
Right.
You can have fantastic commercial partnerships that in theory on paper should work very, 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 very well. But if both partners aren't fully engaged, if there's no real trust built up between them, if there's not good communication between them constantly, you'll generally find those partnerships either won't work at all, or they'll never really be as successful as they could be.
Right.
The relationship is probably one of the most important parts moving forward. It's generally a very long cycle to get a partnership set up in the first place, whether that be through technical integrations, commercial contracts, agreements, the legal side of things as well. It's a very long process. So realistically, if you're not managing that relationship from that point onwards, you've wasted a very long period of time. Again, for us, for example, if we're not keeping an eye on how happy partner customers are,
Right.
and we're giving them a bad experience, or something is wrong in the process and we're not picking that up quickly, relaying that to the partner so they can either make a fix on their end or we need to make a fix on our end. Those sort of things aren't picked up unless you have a good relationship and you're really both being very proactive with the relationship as well. So for me, putting all the commercial stuff aside, a lot of things make sense on paper, but they don't work if the relationship doesn't work and isn't built over time and that trust isn't there.
So what is your practical, go-to advice that you would, use engaging partners?
So generally I look at it in very separate ways. You need to build a relationship and build trust with, for example, senior management teams and key stakeholders to initiate the partnership.
Right.
Have those talks about, hey, where are we going to benefit you? Where are you going to benefit from us? And how are you going to benefit us as well? So, having those discussions and then furthering that into commercial talks about how will this work in a commercial sense, how can we keep this efficient, do you need to make more tech resource, or do we need to do tech resource? That's one side of conversations for me. The relationship is a completely different side of conversation. So it's not an individual, it's not worth looking at it as an individual relationship, because that's where a lot of people get caught out. If I'm talking to a senior management team about commercials, they're not going to have, for example, the same insights as maybe a product team or a customer-facing team.
Right.
So for me, it's very important. I have a team that also looks after that side of the relationship. We'll be talking to in-house sales teams and going back and forth with them, talking about how this customer got on, and so on and so on. And actually, that's where we'll pick up the majority of small problems. I don't mean sort of big tech fixes, but there might be, for example, a data point is coming through slightly wrong. We don't really pick that up unless we're having those day-to-day talks. Hey, how did this customer get on? How did this customer get on? That's where we pick up, actually, quite a lot. We're seeing this common problem, and it's a very small problem you wouldn't realise if you just looked at numbers.
Yep.
So for me, that side of the relationship is just as important just as important as having that relationship with key stakeholders, CEOs, the commercial side of things as well.
Right.
So I look at it, as I say, in a very split view. There's two relationships. There's the commercial side of things, and then there is the sort of really what I would call the relationship side, which is not actually high up, it's low down. All the customer-facing teams, all the people who are actually dealing with it on a day-to-day basis.
So your company now is more or less mature fintech, which is quite exciting.
Yeah.
So how do you see partnership as a role, as a kind of function evolves over time?
Yeah. So partnerships, especially within fintech, is always a key feature. Most revenue growth of fintechs, most customer-based growth, is done through partnerships. If you take, for example, any digital lender, we wouldn't survive if we didn't have partnerships with banks, with service providers who could also offer credit to their SMEs. Lending is, if you approach, for example, just lending as one thing, that's fantastic. Most companies need finance at some point. Lending will always be something on their mind. But if you can tie that in with services they're using on a day-to-day basis, that's where you then become not just a lender, but you become a key lender and a very visible lender in that space. We wouldn't have that visibility without our partnerships.
Right.
People can hear about, for example, iwoca through bus advertising or through radio advertising, email shots, mail shots, whatever you want. But where they're really going to remember us is when they're using, for example, their digital banking app and see we can get a credit line, it's provided by iwoca. You remember the name iwoca because it's the lender that you're getting your credit from through your bank. So partnerships is a very, very key feature to any fintech. And the same with banks. If a digital bank, for example, is giving a new feature, like a cash flow feature, for example, and it's becoming very, very popular, people are going to remember that bank because of that cash flow feature. And that feature may be an outsourced feature. It may be provided by, I wouldn't say zero, but it may be provided by any cash flow fintech in the industry. So really that bank needs that partnership as well because they're being remembered for that key feature or that key partnership.
Right.
So it's very important for customer retention, it's very important for brand visibility, and it's very, very important for growth as well. Right. Moving forward, that's only ever going to expand. You're seeing more and more fintechs moving to more marketplace style operation.
Yep.
So for example, if you look at digital banks a few years ago compared to now, you'll have a digital bank. It's just a digital bank. It has its own few features, a current account, maybe some sort of spending management features or sort of expense management features. Now, if you look at, for example, someone like Starling, you go on there and then they have their own marketplace. You can plug and play with different accounting providers, different lending providers, different insurance providers. It's much more a marketplace option, and that's because customers are evolving. If you look at the typical customer now that's using digital banking, it's more than likely not going to be millennial. Right. And everything in this age has become very digital. Everything, people expect to be able to do things on their phone or on their laptop in their own time very, very quickly. So having a marketplace is an obvious route to growth. Right. You've got this product, rather than go to someone else separately, let's just give them all of these options that they can just bolt onto this existing product. It improves customer retention, it improves growth across the marketplace. So partnerships is really going to expand and expand, and you're even starting to see now some of the main banks sort of take on this almost like marketplace option, where you've got sort of banks tying in with people like Bud, for example,
right,
where someone can use their normal bank account, but by using Bud, tie in their accounting platform, tie in an expense management platform, tie in different lenders to it which can feed in and out of their bank. So really partnerships in a growth perspective is probably one of the most important sectors moving forward in fintech.
Do you think it is possible to engage in partnership for almost like any tech-enabled company? And what would be your couple of advice for other tech companies who are thinking about partnerships?
I think realistically there's no limit to partnerships. There's no one who should sort of have an idea, believe in their idea, and then think, oh, maybe we can't pull off these big partnerships.
Right.
I think realistically, the way to think about it is, what is your value add? Where are you really adding value? And realistically, that's probably why you started the company.
Right.
You know, we found something that's underserved, or it's not being done properly, or we've made more efficient. Great, let's build a company around it. So you have to look at it from, take it back to not just, hey, what we've done as a company and how big we are, or how old we are, or how long we've been going. What are we solving? Who else is going to benefit from us solving that problem? And how are we going to approach that and make sure that value add is very, very clear to them?
Right.
I think a lot of people get caught down in partnerships because they're looking at, they forget that point. They look at, hey, we need to partner with someone for customer growth. We need to be able to access bigger customer bases. We need to partner with a big name because it's going to be great for brand awareness.
Right.
And those sort of points start overtaking the key point, which is, what is the value add? When you're having that partnership talk, you can't, especially if you're small, you can't add masses to their customer base. You know, if you're, for example, iwoca a few years ago trying to partner with a bank, we didn't have tens and tens of thousands of businesses that they might be able to access to. So we can't use that point. You know, we sort of essentially, it becomes a one-sided partnership. But where it becomes two-sided is by saying, look, we do want to access your customer base, but 80% of your customer base are all facing this one singular problem which we solve. Right. So yes, we're accessing your customer base, but in return, you're giving your customer something they can't get anywhere else. And that aids in customer retention. That also aids in more customers coming to you because they know you're fixing that problem. So, you know, really have to look at it as, what is the value add? So if you put it into an iwoca context, we were doing sort of unsecured business lending to a very underserved part of the market. People were struggling to get business overdrafts, struggling to get any sort of business credit if they were under 3 years old, for example. Right. If they were able to get it, it generally wasn't unsecured for any reasonable amount, and it was taking weeks, if not months, to actually secure. So we were lending to those people that others were saying they're too risky for us. We were doing it unsecured. So we weren't cutting out people who were, I mean, realistically, if you think of living in London, the majority of people rent till quite late in their life. And at the same time, we were doing it within days, if not hours, and now minutes. Right. So our value add was very, very strong. If you're a digital bank and you want to partner with someone for lending, you don't want to lend your own. And obviously, being able to lend takes a long time to do. You have to build up risk brackets, say what's a risky customer, what's not. You need a lot of data to do that. And you need a lot of capital, especially if you have another core business that is taking most of your capital. It's not really viable. So we were saying to them, hey, look, we can be the lender. We can give you that lending capability. We can do it 10 times the speed of a bank. And we can lend to the majority of your customers where the bank is actually turning them down. Yep. And over time, that's when you then focus on the other things. Hey, we've now got a growing customer base. We've got new products that we can add on. We've got, we've proven that our risk model working on very, very low loss rates, for example. So it's not something that is just a year-long thing and suddenly it all breaks down. That's when you can start focusing on other points to really build that relationship and try and get more sort of commercial value from it. But our key proposition was, we're offering you something that you can't get anywhere else and your customers really want. Right. So that should always be the key focus. What is the value add? That's the best advice I could probably give for anyone looking at partnerships. Yeah,
makes sense. So two-sided relationship, clear value proposition, and constant engagement. So congratulations on recent use on winning the grants, and it is somewhat based on partnerships. Tell us more about it.
Yeah, so what the winning the BCR allows us to do is really, a big part of that is focus on sort of an open lending platform. If you go on sort of,
and excuse me for interrupting. For the context, BCR is
the banking competition remedies.
Awesome.
So that's RBS gave away just over, I think, 400 million to pools of other fintechs, and that could be anyone from digital banks to service providers, sort of accountancy providers, to lenders, anyone in fintech that was really sort of pushing boundaries and going to allow the industry to grow as a whole, and at the same time give customers a much better experience as a whole over the next 5 years. So we fit into the lending side of that, and a big part of our bid for the BCR was an open lending facility, and what that really does is that's the next phase of partnerships for us. That's by saying we have probably one of the most extensive APIs already in Europe for any lender in what allows us to do capabilities wise. And we're also still one of the fastest lenders in Europe. So how do we, really what that is how do we take that value proposition that we've now proved is added value and works very, very well for different partners, how do we expand that, and how do we give other people sort of ability to use that very, very quickly. So the open lending platform essentially allows them to go on and test with our API, use sandbox features, rather than having to go through big commercial discussions and then go through tech discussion and product discussions. It shortens that cycle a lot, and it says, look, you can come on, you can access the API, you can test with it, you can also do things like create maybe your own niche products with it. You know, you want to offer a specific term at specific rates to your customers. You can create all of that yourself with iwoca behind it as the tech and the lender.
Awesome. Build
that into your platform, and then you can really take our value add, make it a little bit more niche, so it's something that you see your customers really want. For example, if we're offering a 12-month facility, but you know you're a specific expense management system, typically all of your customers are getting cash flow gaps of no more than 3 months all the time. So you want to create a specific product that's just 3 months long, has set rates, and offer it to your customers. You're using our value add of the speed and the API and so on, turning it into your own sort of value add for your customers, and really making the most of that partnership you possibly can. So for us, that's really enabling us to build a partnership base much, much faster. But on the basis that we're building that partnership base on that value add, we're not just trying to grow a partnership base, we're saying, look, we know people value this, we know people need this, it's clearly still an underserved part of the market. Your customers are probably saying they need this too, or you can see through their operations they need it too. Let's reach those customers together. And that's really what the BCR bid is allowing us to do at a much quicker pace. We would always do it anyway. But again, a sort of cash injection like that is fantastic. It helps you do things much, much faster, pull in the resource you need and so on. So that's probably our next big step in sort of pushing the boundaries of fintech, and sort of really there isn't a system like that currently available where someone can really just plug and play, create niche products for business lending. There's a little bit of it in sort of a personal lending, but you'll generally find business lending follows personal lending.
See, we know how busy you are, so thank you so much for being with us and sharing with our users your insights.